Hello everyone, Tim Erickson here. I'm back for my week 5 update in my Robinhood challenge where I started with $10,000. My goal is to turn it into $100,000 as quickly as possible, but at the same time not taking any strategies that are too over the top risky, and trying to focus on a strategy that I think is both, highly profitable, easy to do, and easy for other people with limited investing experience to replicate. So I hope that you guys are learning something from these videos. If you are, please consider leaving a like, as it really does help out the channel. And remember to subscribe to the channel for future updates. So without further ado, jumping back in, I am a little bit late recording this, as today is actually Monday, the start of week 6. But just to give you an update on what we had accomplished in week 5, I want to first come back over here and go to my messages, and I can scroll back to last week, and you can see when I closed out some positions. So I started off, I closed some of my energy transfer puts. I did pay $3 to close them. If you'll remember, I think I got a little over $7 to open them, so a little bit more than 50% of my potential profit I locked up, but mainly closed these ones because I wanted the collateral released, because there were some other opportunities that I felt like were highly profitable that I was waiting to open. So I closed those. Also closed my CVS puts. These ones didn't expire till May 21st, so it's still about a month away from expiration on these. Closed them for 8 cents. I don't remember exactly what I got, but I'm sure it was in the 40 to 50 cent range when I opened them. So again, a situation where over a month till expiration, and most of my profit was already locked up, so I went ahead and closed them to release that collateral. These were $2.50 spreads, so I had $250 collateral for each. So this actually released $500 of collateral that I could turn around and reposition. So that was obviously great. I took that same collateral and I opened this one put credit spread on Facebook. As you'll see here, I opened one on Facebook for a credit of $100. So if you'll recall, it cost me $8 each to close those two CVS spreads that had the $500 collateral. So it cost me a total of $16. Those contracts were going to expire on May 21st. And coming in here to my Facebook position, you see here this expiration date is also May 21st. So this really demonstrates the power of this strategy, in that I had this $500 collateral tied up with only another $16 profit potential between the date I opened this and May 21st. If you come down to history, say I actually opened it on April 21st, so it's literally exactly 1 month, right? So in that month, I had 16 potential profit to be made on CVS. By paying the $16 to close out that position and releasing my collateral, I was able to open this position for a credit of $100. So assuming this works out and expires worthless, as I hope, as you can see, we are on a good start, as it's already predicting it's already gone down from 100 to 71. But assuming this works out as I hope and expires worthless, then I'll have made an additional $84 profit. Because you remember, I paid $16 to release the collateral and close the CVS puts. I received $100 when I opened this one, so $100 minus that $16, $84. So really the power of this strategy is I didn't even have to extend out the time frame that collateral is being held. It still expires May 21st, but because I found a different stock that I wanted to place it on that I felt like had good potential, then I received a much bigger credit. So that really shows how powerful this strategy can be, as I'm only a little over a month into my challenge. And, I made a really nice return already on those CVS puts. Closed out a little early for a small fraction of the cost, compared to the credit that I received when I opened them, and now reused the collateral already on Facebook with the same expiration date. So you'll see here at the top, Facebook's currently trading at $303 a share. My puts are at $275 and $270. So for those who are new to the channel, that means I sold the $275 put and I bought the $270 put. That difference of $5 times 100 shares means I need 500 collateral to open this position. If Facebook were to plummet way below 270, my account could be charged $500 in that instance if the puts were exercised. Because I received $100 credit, that means my max loss in that scenario is $400, with my max profit being $100. Some people might say that's not a very good risk to return ratio. I would counter that it is, because it's a much higher probability of success than just a coin flip. So as long as Facebook stays above 275, these expire worthless, and I make my max profit of $100. It could drop all the way to 276, right? But if it stays at 303 or above, or even if it drops but stays above 275, the puts are fine, they expire worthless, and I make the max profit. So that was one of the positions I opened this week. Coming back into my messages, you'll see that the next thing I did is after Facebook, I got a small Oracle dividend, $6.40, nothing to write home about. And then I also opened a whole bunch of puts on on Viacom CBS again. And to see that, you kind of really got to scroll up because this all happened last week, and there have been a lot of notifications to that effect. But so this was the 23rd already. So even coming back to the 21st, we'll see here I bought a couple of shares at 38.12. And then bought another 5 shares at 38.13. And there were a whole bunch of puts that were opened on Viacom also. To show you some of the puts that were opened, I'm going to first come over here into my history and look at expired options because some of them already did expire. So I had options that on Viacom that expired on Friday. And if I come down here, you can see I had a 36 and a 35 put. So literally on Tuesday of last week, I opened these positions that closed on Friday. So they were literally only open for 4 days. I sold the 36 put and I bought the 35. At the time, Viacom was trading around $38, so it was only $2 out of the money. But again, this trade is a bet that the stock won't drop below 36. So it could have dropped a little bit more, just not a ton, and to make my trade work out okay. It's a $1 spread, 36 to 35, so I need 100 collateral for each position. I had 4 of them, and I received an average credit of 12.5 cents. Again, times 100 shares means $12.50 times the 4 contracts, so I got a total credit of $50 for 400 collateral, but it was only a 4-day contract. So after 4 days, they expired worthless because Viacom ended the week over $40, and I got to keep that whole $50 credit, and that 400 collateral was released. You guys will recall I also had a number of contracts, both puts and calls against SPY, and they all expired worthless. These were also shorter term. They were, 5 to 10 days expiration from the time I opened them. They have all expired worthless, so that was another couple $100 collateral that I can now repurpose. And I had these short-term puts on enterprise products that also expired worthless. These ones, if you'll remember from previous video, I opened 3 weeks before their expiration. It was a 50-cent spread. I only got 5 cents credit, so it's 10%, but 10% in 3 weeks for a position I felt was very safe, was attractive. I had 5 of them, so I made $25 there. So that's nothing to write home about in itself, but if you look at the portfolio overall, you'll see we are doing quite well, up to $11,900 and change, which is a little over $400 above where we were in our last update video. If I click the all-time chart, you'll see we're up over 19% now. And going down to the option positions, I did mention that I bought a bunch more shares of Viacom, so I'm up to 20 shares now. You'll see my average cost is down to $38.80 because I was purchasing them at this point back here when I didn't quite get the bottom at $37.40, but I bought them at just over $38, right in this range, $38.12, $38.13 I think it was when I bought them. But one thing I did to buy them actually is something that I do recommend people use caution with. You guys know me, as I open my puts and I receive all these credits and this cash into my account, I do like to reinvest it in the stocks right away. And I was doing that, but Viacom had dropped to a point that was low enough that I wanted to add a small position, and I didn't quite have the cash on hand ready yet, so I actually did go ahead and use margin to do that. And that is something I caution people be careful with doing. As you see here, I currently have margin used to just over $100. It was higher, and then I opened a bunch of puts today to help reduce that. It was, I think, a little over $200 margin used. I did mention before my goal is to do this challenge without paying a penny in margin interest. And because when you're a Robinhood Gold subscriber, they give you $1,000 of margin interest free. Only using $200 of that on an account that was worth over $11,000, I felt like wasn't too risky of a proposition. But So I had a little over $200 of margin used at the time, and then this morning, with all that fresh collateral from my expired options, I went to open some new positions. So you'll see here I opened these SPY puts. Today I received average credit of 5 cents, and I did 5 contracts for a total of $25, which is not huge, but these are short term. Again, these expire this coming Friday in just 4 days now, and all I need is SPY to stay above 407. It's currently trading at just under 418. So I opened those. I am going to have my eye open on SPY calls, because for those of you who remember before, I talked about the iron condor strategy, which is where you combine a put credit spread and a call credit spread. And because I already have this collateral tied up on these put contracts, I could go ahead and open up call credit spreads against the same position with the same expiration date for no additional collateral. So I am keeping my eyes on the pricing there, just to see if there's anything I want to open. These are, again, the puts that I opened. So if I switch it over to calls with the same expiration date, I'd obviously hope to be pretty far out of the money. I'm trying to get at least $10 out of the money, but in this current scenario, coming up here to 428, 429, it's only estimating a 2 cent difference. In my mind, that's not quite enough to justify, the risk to reward there. But if SPY runs up again tomorrow, maybe I'll all of a sudden be able to get decent credit here. Or maybe I'll consider coming down to 426, 427 or something like that. Just to see. Just depends what happens, in the next day or two. I'm gonna keep my eye on it and maybe do something there. The other thing I did is I opened these Viacom puts that expire May 7th. Now, obviously, those who are paying attention, I am a little bit heavily concentrated on Viacom at the moment, and again, that was because of my thesis that it was oversold at the time. You'll see here I did get a 17-cent credit on these puts. They expire in just 2 weeks. I did 5 of them, so I had 500 collateral. I received $85 credit. That's a 17% return if they expire worthless in just 2 weeks. So very, very good deal there. I mentioned other puts I opened in Viacom last week, actually, and that was these ones, which have performed very well. I opened this when it was trading around $38, currently at $41.75. These ones expire April 30th, so they were 10 days until their expiration date when I opened them. I received an average credit of 19.2 cents, which for 5 contracts, which I have, totaled $96, so just over 19% return in 10 days if they expire worthless, which right now they practically are. They expire this Friday. We're almost $6 out of the money. Obviously, something could happen. The price could tank, but it can drop over $5 and I'd still be okay as long as it doesn't dip below 36. So another trade I was very happy with. Very happy to make a very high return on that in just a short period of time. And that about sums up the trades in the option portfolio last week. So you'll see here, I do have a decent number of contracts expiring this Friday now, as well as one position next Friday. A lot of my other positions are starting to inch closer and closer towards their expiration dates and are starting to deteriorate in value because the stock prices continue to do well and haven't really dropped much from when I opened them. And now as time is passing by and the options are getting closer to expiration, that what we call time decay is occurring, where the option loses value over time. And that is what I want because I sold the options, so I was paid money to open them, so I want them to become worthless and I don't want to be obligated to buy them. And then the stock positions, they were down a little bit in the market today, but overall, still performing fairly well. Oracle has pulled back a bit from its high, and Lockheed Martin pulled back a little bit also, but we have added to our Viacom position, and things are looking pretty good. So just to round up the update for the week, if I come over to my history, you'll show we have 3 pending dividends that are going to be paid towards the beginning of May for small amounts there. And if I come over into my account, you can see the current balance of $11,903 and then the return on all the stock positions, which are all currently in the profit. Oracle was up quite a bit higher. I think it was a 240 or so. It's now pulled down to 151 profit, but still one I plan on holding for the long term. AbbVie, which is one I was adding to my position rather aggressively since I opened the challenge. I think when I started with only 12 or 13 shares here. I'm up to 17, so I did put another couple $100 in there as I got some credits, and it has obviously worked out. It's not only the price gone up a decent chunk, but I have a pending dividend from them too. So really pleased with that. And even Viacom, because I bought those shares down close to $38 on my margin, has seen a nice profit as it's recovered. So buying the stock on margin is not something you guys will see me do very often. In fact, there's a decent chance I won't do it again, or you'll be able to count on one hand the number of times I do that throughout the challenge. And again, it was a very small amount that I did. I did it with an amount that was small enough that I'm not going to be charged any margin interest. As you can see here, if I come down, still says I have 0 unpaid interest, even though I did that middle last week. So I was carrying a margin balance for almost a week there. But again, not something I recommend everybody get involved in, and if you do, please be responsible about it and have it be a stock that you are very confident in and not do an amount that will put your portfolio at risk. So only margining a little over 200 when I opened it on an account this large, wasn't going to risk my whole account there. So you'll see here the margin used has now decreased to just $108 because of all the credits I received from the puts I opened this morning. And we're currently using 6,200 in options collateral, which is pretty darn close to fully deployed. They would let me do another half of this, so $60 or so. So I could maybe look for something small, but I'll probably just let that sit for the time being. As things continue to look like the prices are getting cheap, I may consider closing out some other positions, especially if there's something else I want to open, especially one like this one on energy transfer, which when I opened, you see this expiration date is until July 16th, so quite a bit of ways until the expiration, but you'll see here we received a 28-cent credit. It's currently only worth 10 cents, so we received $56 when we opened these two contracts on our 200 collateral. If we had to pay 10 cents or $20 to close them, we could lock up that $36 profit, get that $200 back, and go do something else with it if we so choose. And that might be something we considered, mostly just because this is so long until the expiration, a little less than 3 months, that it might make more sense to reposition that into something that expires sooner for a higher return. But overall, very pleased, again, with how the challenge is going. We're yet to have a down week, and I don't want to knock on wood and jinx that, but very pleased with how it's going. So I'm also curious to hear your comments from you guys, the viewers, if you have any questions about the strategies I'm imposing, any of the stocks I'm investing in, and or have something else you want me to check out. If there's a stock you want me to review or anything like that, I'm more than happy to take some time in another video dedicated to that. But for now, this is my update to week 5, and I look forward to catching up with you guys next time.